All right. Hello, everybody. Welcome back to another episode of The Market Close. It's a disgusting, disgusting day. It is not a fun day to basically end out the month of March. We got one more day on Monday, and then we will officially be done with Q1. But it was an ugly day. It was an ugly, ugly day. We've got a lot of headlines to cover, a lot of stuff to go through in terms of how ugly this day was. But just to give you a sense of how bad it is, I mean, look no further than the S&P 500 down more than 2% on the day. We haven't had a 2% down day since 2 weeks ago when we had the essentially bottom 549. We are very close, by the way, to that bottom 549. We are now at 555. You can see right here, 548 was the bottom. 548 on March 13th. It is March 28th, and we are right back down to 555 after getting up to 576 at one point. So the fact that the market has pretty much given up every single core level that you wanted to retain, 560 was kind of the base case today that we needed to hold. Yeah, that went away and then some as we end out the week. NVIDIA is down 1.76%. Robin Hoodie is down 5%. Lululemon, after a crappy earnings yesterday, is down 15%. Coca-Cola, out of all stocks, you think that would be some safety, that's down 1%. Why is that down? Because RFK Jr. came out with a statement today saying that he is supporting people who are on food stamps, which if you're international and you don't know what food stamps are in America, it's basically these vouchers that the government gives to people who can't afford to buy food. He is in favor of banning people on food stamps from buying soda. And as a result, Coca-Cola is getting hit about 1%. I would imagine Pepsi is down as well. Pepsi is down about 0.29%. So just a wild day across the board. Google, they took Google down 5% on the day. I mean, Google's $4 away from revisiting the 140s, which is insanity in my opinion. And there's a couple stats on Google that I want to show everybody in a second. Tesla is down 4% on the day. I mean, it's just been a ugly, ugly day for the broader markets. The Qs back to 468, down 2.74%. And then Bitcoin trying to hold on to 80K. Right now it's at 83.7, but that's down from about 87 earlier in the week that we saw as well. It's ugly. It's ugly. It's ugly. It's ugly. It's one of those days where, I mean, maybe you take advantage in DCA. Maybe you sell some covered calls. If you have covered calls, they're probably printing today. But yeah, this was a nasty, nasty day. So let's talk about why it's nasty. First of all, thank you everybody for being here. We got a bunch of stuff to talk about and a bunch of stuff to go through. In my opinion, the reason it's nasty is because of two things. Number one, April 2nd is getting very close. We are on March 28th. In about 5 days, we'll have April 2nd. So I think the market is rightfully saying, hey, let's just reduce some of our risk exposure before going into April 2nd. No one really knows what we're getting on April 2nd outside of the rumors. Trump did make some statements about tariffs today. I mean, let me play a couple clips right here. He essentially said that they're going to be good. Tariffs are not going to be an issue. I had a great call with Canada's PM today. And so, you know, like he thinks that the relationship's going to be working out very well and things are going to go nicely. The question is just, A, does the market believe him? And B, like, what are the specifics on the tariffs going to be? And on April 2nd, we're going to figure out, unless there's a delay to May 2nd. But I think the market is rightfully saying, hey, let's just not go risk on until we figure out what the hell is actually happening. Here's what Trump had to say about Canada, and then we will move on from there.
We had a very good conversation. Mark called me today at 10 o'clock. We put out a statement. We had a very, very good talk. He's going through an election now, and we'll see what happens. But we have Liberation Day, as you know, on April 2nd, because, and I'm not referring to Canada, but many countries have taken advantage of us, the likes of which nobody even thought was possible for many, many decades, And, you know, that has to stop. We're going to end up with a very good relationship with Canada and a lot of the other countries. Some we probably won't. It won't be so pleasant. But I think most countries are agreeing with me. They actually, many of them have actually apologized. They said, look, we have taken advantage. And I don't blame them as much as I blame the people that stood, in this case, I can say the men, because so far they've been all men, haven't they? But the men that sat right there and behind the Resolute desk, mostly the Resolute desk.
Again, Liberation Day. I mean, I guess we'll see on April 2nd. And then this is what Trump said about auto payments. in regards to being interest deductible on your taxes. I think he's kind of saying this to soften the blow from the fact that these tariffs are going to be really bad for manufacturers. But here's what he said about that today.
And if you build a car in the United States, and one thing that I just spoke with John Thune about, I just spoke to Mike Johnson about, Speaker. We're going to do something that has never been done in this country before. I'm very proud to say it was my idea. And so sometimes a simple idea, they say, how'd you think of that one? It's so simple. It was never done. If you buy a car in the United States that's made in the United States, if it's manufactured here, when you borrow money, if you borrow money, you have interest payments. We're going to let you deduct the interest payment for income tax reasons. And I think that's going to more than pay for itself. I think people are going to be, they've never had a deduction. You know, deductions are supposed to be for like rich people, and it's unfair to have that. But rich people are, I think I know more about deductions than any human being on earth. But, you know, the truth is that people that are middle income people that buy a car and actually have to borrow money, they're going to now get an interest deduction on their car if it's made in the United States. If it's made someplace else, that won't take place. But
okay, like obviously I like the idea. I think it's a smart idea. The problem is like that's not going to make up for the tariffs that he's imposing on all these auto companies. And so like, yeah, is interest payments on your car, making that deductible on your taxes, is that a good idea? Sure. I mean, like I don't think anyone necessarily hates that idea, but that's not going to really soften the blow from 25% across the board on every auto company. And I think that's why he's trying to, you know, make this seem like this is a good idea. But at the end of the day, the market is not caring about that. The market more so cares about what's going on with these tariffs. S&P 500, 555, down about 2% right here. We got about 8 minutes until we get into the close for Friday. Palantir's down 5.2%. Coreweave, by the way, they officially IPO'd. They got to a high of, I think, 41. They IPO'd, I think, at 38. Now they're at 39.78, so it's down 0.5%. I mean, it seems like a decent IPO. Like it's not dramatically down from where it showed up, you know, barely down 1%. But I don't think anyone's necessarily comfortable with a brand new IPO, which means Discord, Klarna, all these companies that were thinking of going public. I think they're thinking twice right now in the context of this environment. And they're really going to see over the next month, is Coreweave successful? Can at least Coreweave hold on to this valuation, or does it get chopped in half? As of today, I guess you can say it's a successful IPO, down only 0.43%, but definitely not an explosive IPO that would get animal spirits to be really excited about the nature of this market. NVIDIA, 109.5. I mean, look, NVIDIA's down 1.73%. I'm happy NVIDIA's holding the 108 to 110 level. We really haven't broken down to that 104 level that we saw 2 weeks ago. Now, if the S&P 500 breaks down another 1%, NVIDIA gets very close to revisiting those lows, most likely. So this is one of those where, again, you've either got to believe the story or you don't when you DCA, but there is a lot of fear right now in the context of how this market is turning out. Robinhood down about 5.38%. Lululemon down 15%. PayPal's down 5.4%. SoFi below 12, down 3.4%. And then you got MicroStrategy. I didn't even see this today, down 10.5%. The only one that was green in the growth stocks were Rocket Lab, based on the deal it got yesterday. But everything else from a growth stock perspective has been aggressive. Just to give you guys some context on how badly the market is treating some of these multiples. Google, I know you guys are talking about that one a lot. Something that I quite frankly can't believe how it got here. Take a look at this stat. Since 2021, revenue from Google went from $257 billion to $350 billion. That's up 36%. EPS went from 561 to 804. That's up 43%. Shares outstanding went from 13.2 billion down to 12.19 billion, negative 8%, which is good for shareholders because they own more of the pie and they're not getting as diluted. Google stock, after increasing revenue 36%, EPS 43%, and decreasing shares outstanding 8%, is up 4% since October 2021. Now, obviously, October 2021 was a top in the entire market, and everything was greatly exaggerated. So you could say, look, Google never deserved to be at those levels in October 2021. But you would think, with all of that growth that we're looking at on a phenomenal company that is not going anywhere, which is Google, stocks up 4% from those levels. I mean, it's pretty great. It's one of those things where forget even buying Google stock. It's to me, it's more so just a sentiment of where the market is, how aggressively the market is thinking that things have gotten to take this bad boy down this much. And that's currently what we're dealing with right now as we see valuations get compressed. Let's listen a little bit to what Ed Yardeni has to say, and then we will end out this market in about 5 more minutes.
For being here today, too.
Thank you, Scott. Sure.
Robert Kaplan, I'm not sure if you had a chance to see our conversation, said stagflation's what this is. Forget about the talk of is it going to be? It is this. If that's true, what does that mean?
I don't really think it's true. If we're talking about a 1970s style stagflation, it's not even close. And if we're talking about even a moderate stagflation, I'll give you a moderate stagflation for a couple of quarters here. I think the tariffs are already having an impact on boosting inflation, but we're talking about inflation between 2.5% and 3%. That's not exactly inflation. And the trend is still downwards. And I think the productivity numbers are going to continue to push inflation downwards. And on the stag side, we're all over the map in the first quarter with all sorts of different estimates out there. But we think it's going to be kind of something around 1% with a plus sign, not a negative sign. And on the positive side, we think the consumer is actually going to spend. They have lots of income. We saw that this morning. And I think people just forget about the weather. I mean, I know it sounds ridiculous to base it all on the weather, but I'm going to wait to see what March and April consumer numbers are going to look like because I think they're going to be strong.
I mean, the evidence would suggest that this was not a weather phenomenon at this point. There's been too much soft data, if you will, to confirm that.
I'll give you
Let
that.
me ask you,
Yeah.
right? I mean, that's
Yeah.
kind of true at this point.
It's kind of true, but January was the coldest.
Not kind of true. I'm sorry. It is true. It is true.
It's kind of true, but January was the coldest month, January since 1988. And February was just about as bad. So they really stood out as extremely cold months. And I think you're going to see a nice big bounce back in retail sales during March and April. And oh, by the way, I think there's going to be a lot of auto sales as people kind of front run an increase in auto prices.
Which could also explode the used car market like we saw a couple of years ago. If everyone wants to get a new car, by the way, Trump did say in his press conference today he was like saying, hey, automakers, if you're listening, don't increase your prices. I don't even know what that means. Like how can he just say, hey, GM, Ford, don't increase your prices? Like what does that mean? Like, of course they're going to increase their prices if they have to. So Trump's giving a warning to them, which has no like foundational merit behind it because he's just saying it. So that means I think a lot of people are seeing that as a warning to go buy a car before tariffs hit aggressively, which means new car prices should naturally go up if you have all that demand chasing it, which then means people are going to go to the used car market, which means used cars are probably going to go up in prices. And so I'm really curious if that's actually going to create a tailwind for retail sales if these cars just get more expensive.
Because of the tariffs.
Let me ask you this. Your target for this year, best I know, is 6,400.
Correct.
How confident are you in that? Earnings estimates are already coming down.
Yeah.
You know, we're below 5,600. You think we're going to get to 64? Is that at risk?
It's at risk, sure. I mean, there's always risk. And I did, I guess in early March, raise the probability of a recession, as I think just about everybody did. We raised it from 20% to 35%, which is a pretty significant increase. There's people out there with 40%. There's one or two that think it's inevitable. I don't think it's inevitable. I think the consumer will make a solid comeback. And I think capital spending, certainly the uncertainty is going to weaken some areas of capital spending. But as we know, there's a lot of money already committed to building manufacturing facilities that have to be equipped with state-of-the-art automation and robotics. That's just not going to go away.
Well, all right, we got 30 seconds until the market closes. As soon as the market closes, everyone can put their year-to-date percentage in the chat. I know we still have one more day left, so technically Monday is when we'll actually have a full Q1 update. But yeah, not the funnest of days, but that's what it's been like being an investor in 2025. Friday, March 28th, 4 p.m., the stock market, thankfully today, is now closed. All right, here we go. I am year to date down 9.25%. We got the negative 9.25% on my end. DC is down -0.4 or 4.25. Haps down -6. Yash down 16. Byron 16. Stock Professor 32. Jonathan 16. Bagusto 3. Sway 7s. I'm seeing a lot between 5 and 15, which I think seems like the average for most people. Some people a little bit under that. Some people a little bit above that. We got Toby up 5%. If you're green this year, congrats. Probably have a little bit of hedges that are helping you out. Or maybe you're in Celsius. Which is outperforming the Mag 7. Dude, if you told me on December 31st, hey, Amit, you want to bet some money on Celsius outperforming Google for Q1? I would have taken Google as that bet, dude, and I would have lost my money. So, look, the S&P 500 is not down 10% year to date. It's down about 5% year to date. Let me get an exact reading on that. Then we'll look at all these other stocks. Year to date, about 4.9%. So we are not at that. We've already had a 10% peak to trough decline, but year to date, we are not officially down 10%. And so now everything rests on April 2nd. Bitcoin is down about 11% year to date. So almost double what the S&P 500 is down. But April 2nd is going to determine everything at this point, which is kind of crazy that this one day is going to have all these implications. But Trump has hyped up this one day. He keeps repeating this one day. The administration is talking about how, I mean, literally they're calling it Liberation Day. So, so I think one of you guys said in the chat, we're getting liberated from our money, but we're going to see what the hell happens on April 2nd and where this market goes. S&P 500 down about 2% on the day. Tesla was down 3.5%. Bitcoin was down 4%. The Qs were down 2.63%. Google was down 4.89% on the day. Robinhood was down 4.71%. Nvidia was down 1.58%. Google, again, was down 4.8%. PayPal, wow. Why did they take PayPal down 5%? That feels a bit unnecessarily given PayPal was already down a lot. But PayPal down 5.3%. Rocket Lab escaped with a little bit of green today. Grab also, you thought Grab was getting some momentum. Gets smacked, down 4.79%. That really does feel algorithmic, nothing fundamental about Grab, but it is caught in the hairs of what's going on in the US markets. Netflix was down 4.39%. Netflix was almost at 1,000 on Monday. Netflix is now down. Uber down 2.87%. Affirm was down 2.59%. Hims below 30. That's down 8.68% today. JP Morgan was down 0.2. It was down 2%. Vistra was down 0.2. VRT was down 2.79. TLT was actually up a little bit. Bond yields did come down. I guess that's one piece of good news today. The 10-year liked some of the price action in the equity markets, 4.259 versus 4.35 yesterday, which was good to see. So TLT served as a bit of a hedge this morning. But outside of that, everything else was pretty aggressive. Rocket Lab was down, SMCI was down 1.3%. Roblox was down 0.71%. All the quantums, actually, QUBT was up 6%. D-Wave was down 6%. So I guess there was some specific news on QUBT that kept it up. AMD was down 3.2%. GameStop was down 20% yesterday. It was down another 1.5% today. And then MSTR was down 10.84% on the day. Palantir was down about 4.71%. What a market, bro. What a freaking market. Did anyone make any moves today? I did buy a little bit more hood. Nothing crazy today. So that's, I closed my covered calls on Google. Yeah, that's pretty much all I did today. Nothing else besides that. But making any moves, it's like if your highest convictions are down 5%, all right, you nibble like a hood, right? But it's also like when you make a move, you're realizing that you have no idea what to expect. And I quite frankly can't blame anyone, especially like hedge funds and money managers that are not making moves until April 2nd, until we figure out what the hell's going on when it comes to tariffs. But I wouldn't, if someone took a stab at Google today, I mean, like you can't get mad at anyone for taking some of those bets. But I also think you can't get upset if people want to just wait this out and see what even happens on April 2nd. Rain Man says, Amit, I know that I love you still, even in the massacre of a market. I appreciate that, Rain Man. Thank you for loving me, even in this massacre. I love all you guys as well. And if we're getting massacred together, then I guess we need the love to keep us afloat in this ugly market currently right now. The PayPal update, EU lawmaker raises prospect of new fees amid trade tensions. Okay, so that's probably why PayPal was down 5% aggressively. Also, Congress the Senate did something today that I don't understand. And if someone can explain it to me, I would love to know. By the way, let's get into some of these updates around what Trump did in the crypto space, given we're talking about crypto as well. But first, the Senate got rid of the cap on overdraft fees being $5 from credit companies. And I don't understand why they did that today, but they voted on that. It's very confusing, but that did happen today. And it's kind of weird because Trump ran on actually like having a limit to credit rates, but the Senate voted today to overturn a rule capping bank overdraft fees at $5. Can anyone explain me why this is good? It's definitely not good for the consumer. Now, granted, it's probably good for financials because if JP Morgan or Bank of America can charge you $30 versus $5 on an overdraft, then yeah, that's great for them. but in this market, when consumer confidence is so bad, like it doesn't seem like if this was the deregulatory environment we're talking about, I mean, does anyone even want to buy JP Morgan knowing that this is the type of shit they're going to do to consumers? Like, does anyone even feel good about that? Like, when we talk about deregulation, we talk about getting rid of unnecessary bureaucratic things that are stopping financials from being able to operate in an environment where they can actually bring back financial stability and more importantly, momentum to the environments like M&A and IPO, not overdraft fees for consumers. So this was incredibly weird today, but this is what happened. Another thing that happened today, Donald Trump just granted pardon to 3 co-founders of the BitMEX cryptocurrency exchange. The co-founders, Arthur Hayes, Benjamin Dello, and Samuel Reed, previously pled guilty to a range of federal criminal charges related to money laundering. I think crypto-only voters voted for Trump to get the U.S. government to buy Bitcoin. I don't know if they voted to grant the pardons to 3 co-founders of a cryptocurrency exchange that were found guilty of money laundering. So, I mean, dude, Trump is losing a lot of political capital. He did finally comment on the Trevor Milton pardon. Now, granted, when you watch this video, he is asked about Trevor Milton, and what he says is ridiculous, but I think he doesn't know he's talking about Trevor Milton. It seems like he's talking about someone else that they pardoned a couple days ago, but the reporter clearly said Trevor Milton, which makes this even worse because if he's not talking about Trevor Milton and he was just on live TV and said he is getting ready to pardon him, which means it hasn't already happened yet, then it seems like he's going to have to pardon him. But here's what Trump said when asked about Trevor Milton today.
Yeah.
What was your reason for pardoning Trevor Milton?
That was pretty clear, right? It's not like that guy said it in a weird. He said Trevor Milton, so interpret it how you want. But the guy clearly said, "What was your reason for pardoning Trevor Milton?"
Highly recommended by many people that was taken advantage of. He did a business deal like in Utah, as I have it. And
Trevor Milton is from Utah, but the guy that people think he's actually talking about also has some stuff in Utah. So it's very weird, but we'll continue.
I think he was exonerated, and then they brought him into New York. We had a rough road. I mean, he was exonerated. It was a big celebration. Again, I don't know him, but I was. They say it was very unfair, and they say the thing that he did wrong was he was one of the first people that supported a gentleman named Donald Trump for president. He supported Trump. He liked Trump. I didn't know him, but he liked him. It was in Utah, and they went after him. They went after his family. They went after his businesses. And he was, I believe, exonerated. And then they went after him again, and they brought him this time into Manhattan. And he had nothing to do with Manhattan. And they got him. And I said, that's unfair. There are many people like that. They support Trump, and they went after him. You don't realize this is a vicious group of people that were in this office before us. This is a vicious group. They're violent. What they were doing to people, and you could go story after hundreds and even thousands of stories, and they went after this man. And when I heard about it, I said, nope, not going to happen. They destroyed 5 years of his life.
I don't think he knows who he's actually talking about here. And if he does, I mean, destroyed 5 years of his life. This dude destroyed billions of dollars of investor capital with securities fraud. So it is just the weirdest thing today, dude, at this press conference. And then to top it all off, the Hawk Tua girl says that the SEC has finished investigating her and will not be pursuing any charges or monetary sanctions. So she'll be walking away clean after her cryptocurrency scam that she engaged in about 2 months ago, which lost people. I think it was close to like 40-50 million bucks that people lost. Winning. I mean, I don't know, dude. Look, I will give Trump credit when there's good things that he does, and there have been good things that he does, but I will also critique when there's some really crappy things. And Trevor Milton getting pardoned, the SEC not going after an obvious pump and dump with the Huck to a girl coin, which is like the most obvious case the SEC has. I mean, they don't even have to like dig for evidence. It's like everything's documented. They quite literally admitted to it on a Twitter Spaces that they pumped and dumped. So really easy case to be able to bring them to justice for, but none of that necessarily going the right way. So yeah, it was an aggressive day, aggressive week, and now we look forward to April 2nd. And I'm not saying oil is gone. I'm not saying we're entering a recession, nothing like that. I mean, just over the past couple of days, there's been a lot of questionable moves. I mean, quite frankly, it's like, forget the economy right here. Political capital. Chris made a good point about this morning. Trump is losing a lot of political capital. I mean, when you pardon someone like Trevor Milton, Elon is best buddies with Trump, which is why a lot of the Elon Musk supporters, who quite frankly were Democrats and were not big fans of Trump and the Republican Party, they converted into voting for Trump for the first time because of their love and admiration for Elon Musk. And so they followed him into this Trump trade. I mean, but they hate Trevor Milton. So it's like, it's kind of like you're stuck in this between a rock and a hard place. It's like you hate Trevor Milton, you love Elon. As proxy of loving Elon, you tolerate Trump, but then Trump does this to Trevor Milton, which if you've been in the electric vehicle investing space for a while, you can't stand that guy. And so it's just people are incredibly confused about how to navigate this right now. So if SBF gets pardoned, market will recover so fast. I think SBF is up next. Dude, SBF, if you've ever done any research on this guy, his parents are very, very well connected. His parents are lawyers, multi-$100 million net worth, connected deeply in particular with the Democratic Party, but they've got ties all around politics in general. I think there is a hell of an argument to be made that if Trevor Milton can get pardoned, yeah, we're probably going to see SBF on that list soon. I would bet some money that he's not going to spend 25 years in jail, which is what he's up for. Maybe another year, maybe another 2 years, maybe another month or 2 months, but I think there's a shot that he gets out soon. Let's finish up with what Ed Yardeni was saying, and then we'll get into the other headlines for the day.
It's also not going to happen tomorrow or next week.
Well, it's happening already because under Biden's stimulus program to build manufacturing plants, a lot of them aren't complete. They're still working on them. I mean, we here in New York, we finished LaGuardia, which is a nice, beautiful airport. And now if you go to JFK, as you know, it's a mess because they're building 3 terminals. There's a lot of construction going on around the country. Still, it's not that suddenly because of tariffs, everything gets shut off.
No, but the longer we're having conversations like this and the tariff news continues to come, oh, by the way, April 2nd's next week.
Yeah.
You're going to live in this period of uncertainty that we've
absolutely.
had. That's
absolutely
the issue.
Right about that. That's correct. Absolutely. And I think, everybody's so worried about April 2nd that maybe once the news is out and the administration's already backed off on making these tariffs, these reciprocal tariffs reflect non-tariff barriers. So that is certainly better news than what we were expecting. And there's going to be a lot of negotiations going on. There's already a lot of negotiations going on. And Scott, as we've all seen, this administration particularly the president, is prone to change their mind and to give us a kind of zig and zag. And that's got the market obviously quite concerned. But I think at the end of the day, the tariff negotiations are probably going to lead to lower tariffs.
Well, I go back to the point that we were discussing with Liz Ann Saunders that,
sure,
if you believe where earnings are projected to be in 2026, I used the Goldman number of $280. 20 times that's 5,600.
Yeah.
Can you, with any level of confidence, make an argument today that this market's justified to trade at 20 times earnings, which are already coming down?
Well, if you take Goldman's numbers, the answer is no. But I think Goldman's numbers reflect a more pessimistic outlook for the economy over the rest of this year into next year than I'm anticipating. I haven't given up on the roaring 2020s concept. It's worked awfully well for me in the first half of the decade. A record high in the stock market, record high in real GDP. I think it's going to work in the second half of the decade here. And I think that the economy is going to come out of this stronger, not weaker. Right now, the administration has kind of thrown all of their restrictive policies at the economy. And I think you're going to see more impact, positive impact from deregulation, from a continuation of tax cuts, and just less government involvement in the economy.
I mean, look, if you take Goldman's numbers with 280 per share and put a 20 multiple, then yeah, I mean, 5,600, we're probably going much lower because we're not going to be trading right at that level 2 years out. But if you get closer to 295 in earnings, maybe put a 22 multiple on that, yeah, then you start to get some more momentum back up to at least close to 6,500. Tom Lee, again, yesterday said that he expects a face ripper of a rally in a sort of aggressive V-shape led by Tesla. It's, again, I've been following Tom Lee's calls for a long time. He's been right way more than he's been wrong. Obviously, he's been wrong sometimes, but he is, I mean, small caps, like we know, IWM, yeah, 200 down another 2% today. That hasn't worked out. But some of these tactical moves, almost you can call them swing trades, he's been relatively correct on over the past 2 years. This is going to be an interesting one because the setup for a face ripping rally also makes sense to me, given where sentiment is, given if you look at a lot of surveys. They are, I mean, the retail investors in particular have become the most bearish they've been since 2022. I mean, like you can tend to try to get a sense of the groupthink when it comes to being bearish, but a face ripper I would imagine that's 6,000 on the S&P. That's like at least 320 on Tesla. And if he says Tesla's leading it, Nvidia's probably meaningfully going to get higher, back to 125, 130, if not higher than that. So that's what a face ripper is to me. A 2% bounce from these levels is not a face ripper. I don't know, bro. I mean, let's do this poll in the chat. Does anyone really think we get a face ripper? Like, I think a face ripper is 6,000 on the S&P. If you want to be, let's call it 5,850 if we want to lower the targets. But a face ripper after April 2nd to me only seems plausible if quite frankly the tariffs aren't as aggressive as what Trump said, right? That would qualify as like, all right, the market is moving on from the fears of tariffs. But if they are as aggressive, then I feel like it's going to still be more like our faces get ripped off to the downside versus to the upside here. We definitely got a face ripper sell-off. That's correct. More like an ass ripper. Oh my gosh. Oh my gosh. Dude, who would have thought 2025, bro? I thought we were ready to make some money. Turns out we were ready to lose all of our money instead of making it. I want to go back to making it. Making it was fun. Losing it makes me sad. Very, very sad. Misha said they bought Google today. I cannot hate that at all. Google's cheap. It's like the fact they took that down 5% on the day. By the way, where did Tesla end? Tesla 262. Okay, so that one, I mean, whoever bought it at 291 is probably not. Dude, it's so funny, bro. Tesla 215 to 290. Everyone's like, all right, we're back. And then just gets smacked right to 263. Now that's better than 215. And I guess if it rips your face instead of your ass, then 263 turns into 330. If it's the opposite direction, then maybe we get back down to 215. We do have the delivery numbers on April 2nd as well. So that's going to be a big deal. Google right here, 156, Amazon 192, right back to that almost low that it was at 2 weeks ago at 189. So very close to that. Nvidia was down about 2% of the day. Tesla down 3%. Apple, they took down 3% of the day. And then Microsoft, they took down 3%. Meta, right back to 576. They took this down 4.29%. It was at 630 3 days ago. Disgusting, bro. Absolutely disgusting here right now. Amber says, where's the liquidity coming from to pump the market? Well, I think I would have two answers to that. Number one, quantitative tightening being reduced from the Fed, which they talked about at the FOMC conference. So a slow off in the pace of selling assets that in general should be bringing a little bit more liquidity to the markets. B, it has to be sentiment driven, right? We have 7 trillion in money market funds. We added 11 billion to money market funds over the past week. You have to see prices get so disgusting, like a Google, where money says, all right, I'm leaving this 4% because I think I'm going to get way better than 4% buying Google at 150. But is that sentiment going to be enough, I think, is the question over the coming months. 54% of you say yes, we will have a face ripper after April 2nd. I hope so. I really hope so. Oh, to pile on to the bad news today, Steve can't make it. So I'm sorry to... He really wanted to go on a rant today. But he just told me right now he can't make it. I said, are you good for the show? He said, I can't make it. I'll just tell you what the rant was about. He literally texted me yesterday and he was like, so SoFi equals so fucked, right? And I was like, well, I don't know if it's so fucked, but I mean, it's not like I'm so excited about SoFi right now. Again, I'm holding on to my SoFi options. I don't think you sell SoFi here, but I agree with Tanner. You know, maybe if you have new capital, maybe Hood gets that over SoFi. But Hood's going to get hit as well, dude. If we get a nasty Bitcoin collapse, S&P goes down another 5%, yeah, I mean, Hood and SoFi get hit. So this is more so a question of not a tactical, do you want to be in SoFi and Hood for the next couple months, but over the next 5 years, which one do you think outperforms? Obviously, my bet is on Hood. But Steve's been a big SoFi bull for a long time. And yesterday was the first. It was so funny. I was with Tanner at the airport. We were waiting for a flight, and Tanner gets a text from Steve about like, so are we selling SoFi or not? So then I tried calling him, but he was in a meeting. But then he texted me later, and he's like, yeah, I'm feeling a little scared right now about SoFi. I do think there is too much bearishness on SoFi right now. Like I think people are thinking like, all right, SoFi's done. It's like, no, dude, Robinhood hasn't even unveiled these products like into the real world yet, right? It's going to take months to get these rolled out. So I think there's a little bit too much bearishness on SoFi. Obviously I'm more bullish on Hood, but I don't think that means you sell SoFi just because Hood's coming out with some new stuff. But long term, like, yeah, it does feel like Hood's obviously innovating more, but I don't think that means you just get rid of SoFi. So I think there's too much on the groupthink of SoFi sucks, they're dead. They are absolutely not dead. And so, you know, maybe the contrarian play right here is to actually get some SoFi. We got Tanner in the chat as well. He's not so excited. Yeah, I would imagine it is not so excited. Yeah, Steve can't make it, guys. I'm sorry. He's stuck in meetings right here. But that's mainly what he wanted to talk about. He said 99% chance, yesterday he texted me this, I sell SoFi and throw it into NVIDIA. Now, I don't know if he did it. I would guess he didn't because I still think he has an emotional attachment with SoFi and Steve loves Anthony Noto. So I don't think he actually did that. But I guess we'll find out next week if he made that move. Now, granted, NVIDIA's, NVIDIA, I think he loves NVIDIA more than SoFi, even though he's been long SoFi longer than NVIDIA. And if NVIDIA really gets back down to the hundreds, I wouldn't put it against him to potentially doing that. Why people on X debating SoFi versus Hood? Well, I think a lot of the SoFi bulls started getting a bit scared by these products from Robinhood, and for good reason, right? Because we're going after the same consumers, people who need banking. And so obviously Robinhood can take market share. And, I think a lot of the SoFi bulls needed to defend why SoFi is not dead, which again, they're correct about. SoFi is not dead. The problem is, the biggest argument I got from these SoFi bulls over the past couple of days was like, oh, SoFi already offers all these products. And it's like, yeah, that's the point. They offer all these products and nothing's happened. Like, there's not been any significant growth. People aren't excited. They're not innovating on those products. Robinhood's basically taking all their products, adding even more features and saying, hey, it'll be in this one app. And so the point is that SoFi's had these products for years and they haven't built anything realistically on top of it to innovate. And so I think the point a lot of the bulls are making are missing the fact that Robinhood's trying to come for your lunch. Again, that does not mean SoFi is dead. It just means there's going to be a lot more competition in this space now. Tanner said he texted me, fuck Noto. Okay, I didn't know. Maybe Steve's getting actually more serious about selling SoFi. Dude, Steve is the first person who sent me Noto's Stanford keynote. If you're a SoFi investor, you've had to have seen this keynote. So I know he's a big fan of Noto, but when you're losing a lot of money, you stop becoming a fan of some of these CEOs. So maybe that's why he's feeling that way. SoFi's loan business is still killing it. Yeah. And last quarter was the first quarter or the second quarter we really saw the progress of the loan platform. So I still have some confidence that that could be something that saves the narrative on this stock and hopefully gets it higher. Also, speaking of SoFi right here, Noto did tweet something today, kind of philosophical for the first time in a while. He tweeted this clip of Tim Tebow, and this was the caption. He said, when the stakes are high and the standard of success becomes being perfect, fair or unfair, doesn't matter. There's only one way forward: unmatched leadership, unmatched hard work, and unmatched grit. God bless WDW Fresh Horses. So basically, Noto is admitting that they have to be perfect to be able to compete, which I would agree philosophically. Yeah, like you got to be perfect to compete. I would be lying if I said I had any faith that they're actually going to be perfect, or any level of excitement that they're going to, I mean, to be perfect, bro, if those are his words, not mine. If he says you got to be perfect, I think they've got a lot going for them to get to any level of perfection right now. So, but the fact that he's up for the challenge is good to hear from. We just got to see if that plays out. Yeah, he's quoting Tebow from Florida on this right here. People are losing their minds because Robin is going to add a checking and savings account. SoFi is going to continue to crush it, not worried in the slightest. Yeah, I mean, again, SoFi will continue to crush it. I just think people are more afraid. It's not even more afraid of Robin taking SoFi's market share. I think they're afraid, or they're annoyed that SoFi hasn't really had these types of events where they invite people and they make a spectacle out of it and they get all this media attention, but Robinhood is. And SoFi is becoming what Robin is becoming what SoFi was supposed to be, which is this one-stop shop for your financial services. Now, SoFi is that to an extent, but they're not making it seem like that from a marketing perspective. And they're definitely not putting up the growth that Robinhood's putting up right now. And so I think that's why more often than not, people are still getting a bit annoyed. Trump just said he will be announcing pharma tariffs soon. No way. No way did he just say that. Is he still talking? Is he live right now? What do you mean he just said tariffs will be for the pharma? Did he tweet? Hold on. Where did he say this? Is he live right now? Bro, this guy's going to take my job. He goes live more than me. Yeah, he just said that. Trump, where is he live right now? Where are we getting these quotes right? He definitely said that quote. Where is he live? Who is he talking to? Where are these journalists getting these quotes from? Is he just like texting about? I don't see any live streams with him right now, but I can confirm from multiple sources. Trump just said, yeah, here's 3 sources in a row. Trump just said he will be announcing pharmaceutical tariffs soon. Bro, what the fuck? What is going on, bro? Oh my goodness. And first of all, where did he say this? I don't see this on his Twitter. I don't see him live. Is he on Air Force One with a bunch of reporters? Like, Trump says I will be announcing pharma tariffs soon. Okay, well, hold on. Where's Eli Lilly? Let's look at the pharma stocks. Eli Lilly, they're slightly down after hours, nothing crazy. They're not reacting super aggressively right now, but they are a bit down. Oh, one thing Trump did say today is that he is open to increasing the highest tax rate for the richest people in the country. So he did say that today in the press conference. The exact quote was, Trump is considering increasing the tax rate on the richest Americans in return for cutting taxes on tips. So part of the logic of cutting taxes on tips is increasing taxes on the richest Americans, which I think is at least reasonable because everyone's wondering, like even Chris said today this morning, right? How are you going to pay for these taxes that you're cutting on tips? Because that still is some decent income for the government. So where are you going to get them from? Seems like he's going to get it from people who are in a higher tax bracket. But if he doesn't do that, then I think the question still remains, where is he going to get this from, right? That's going to be the big question. Novo Nordisk, let's see when that one is doing after hours. That one has had a rough year. Wow, it was down 1% on the day. It's up a little bit after hours, 69.30. I remember seeing that at 90 earlier this year. Where was that in the beginning of the year? Yeah, 93 back in February. Now down to 69. That's probably why HIMS also got a little hit. Down about 8% on the day. So this is the full suite of tariffs that Trump has now announced. Let me pull this up right here. So, and this is only what we know so far, April 2nd. I wonder how they're going to do this event. Is it going to be some big press conference? Or are there going to be a bunch of people there? Like, I wonder what the presentation of these tariffs are going to look like. So here's what we got. Canada, 25% tariffs on most goods, including steel and aluminum. 10% tariff on oil and gas, delayed until April 2nd. Mexico, 25% across the board. China, 20% across the board, increase from 10% on March 4th. European Union, tariffs on EU with 200% of a threat of tariffs on alcohol. So we don't know the exact amount on the rest of the EU goods. I think that would be ranging from 10 to 20%, but 200% on alcohol. All other countries, 25% on steel and aluminum. That already went into effect. 25% tariffs on all vehicles manufactured outside of the United States. That goes in effect April 2nd. Russia, 200% duty rate on imports of derivative aluminum articles or those using primary aluminum smelted or cast in Russia. And then other countries will get reciprocal tariffs, aka if India's tariffing us 20%, we tariff them 20% back. And we're targeting about a 15% rate for nations that account for the majority of U.S. foreign trade, which includes Thailand, India, Taiwan, Vietnam, Japan, and Malaysia, based on trade surpluses within the U.S. or differences in average tariff rates. Okay. So it's going to be a very tariff-filled April 2nd, dude. Holy crap, man. Holy freaking crap. I really wonder how the hell they're even going to present this. Like, how are they going to even bring up these tariffs? What is it going to look like? This is quite interesting. Let's listen to Clausdia Sahm. She is the inventor of the Sahm rule. Let's get her take on the market. Remember in 2024, I think, I'm forgetting exactly what lines converged. I think it had to do with unemployment. It went down below 0.5% or something on the monthly, and that's what triggered the Sahm rule, which says that basically 18 months after that happens, you have a recession. So far, we haven't had a recession, but let's get her take on where the state of the economy is right now, and then we'll keep going from there.
And Claudia, it's always great to have you on. So definitely want to get your takeaway from the data, the disappointing data we saw today, especially in light of all the debates we've been having around soft versus hard data.
Yeah, this is tough. You know, on the inflation data, it was yet another month that underscored a theme that frankly has been with us for several months, if not the past year, grindingly slow and uneven progress towards 2%. Right. And I think then we also remember we are in the early innings of what could be inflation picking back up. Today's inflation data might count as a good day when we get later this year. So I think that's what's also really disappointing is before a lot of these policy impacts are in place, we have inflation looking pretty weak. Inflation picked up, looks, strong. The consumer spending did not have the pop in February we were hoping for. So it's like you have a setup that isn't good. And then I think it's very rightly so that consumers look at this, business look at this, and you ask them, what do you expect for the rest of this year? And you do not get very positive answers back.
I mean, we got the FOMC meeting last week, and the big thing that came out of that essentially was the SEP and the dot plot and the economic forecasts. And as our own Steve Leisman has pointed out, what you saw if you read through some of the decisions that went into some of those forecasts is a tilt towards perhaps rising risks of stagflation. Are you in that camp?
Absolutely. That jumped out at me first thing in those summary projections. Normally when you do a forecast, and each Fed official gives us their baseline forecast for this year, and they maybe had a whiff of stagflation, right? But very minor. They're really pretty optimistic forecast. And yet when you get down and ask them like, oh, how do you feel about the forecast? They're like, well, we're really uncertain, not pandemic level uncertain, but really uncertain. And then it's like, okay, so you think you might be wrong. Which way are you going to be wrong? And it is all so shifted towards we're going to be wrong with stagflation, lower growth, higher inflation, higher unemployment. And that skew, that imbalance, that was at the highest level that's been in those forecasts since they started in 2007. Normally,
and again, we saw this in the morning, but going towards this stagflation argument, we had GDP growth at Atlanta Fed says negative 2.8%. So that's based on weak net exports are doing most of the damage, with the model now estimating they're shaving off nearly 4.8% from growth. The gold adjusted model looks better at negative 0.5%, but either way, you can see whether you adjusted with gold, whether you adjusted with net imports or exports, you get a negative 3% quarter on growth from a 2.4% quarter we just got in Q4. That's it doesn't look good. And if inflation's going up like it did today at 2.8 versus 2.7 expectations, that kind of is the definition of stagflation. Now, I don't think that's necessarily going to be in a 5-year stagflationary period, but right now it doesn't look the best.
Move your forecast in that direction if you think you're going to be wrong that way. So yeah, that was a pretty downbeat picture. And I think the Fed speak, the officials that have been out since the meeting have underscored that pessimism.
And we've certainly had quite a bit of Fed speak, not only today, but all week. Muslim in particular, a couple days ago, getting a lot of attention for some hawkish commentary around tariffs and the potential impact there. So if we have an administration that's cutting government spending, or at least attempting to, if you aren't a Fed that's printing money right now, doesn't that help to ensure that any inflationary bump that we do potentially get from tariffs and shifts in trade policy, doesn't that help to ensure that it is in fact transitory, to use the word that Powell used last week?
So the tariffs have this stagflationary impulse, right? Like we talked a lot about how they could raise prices for consumers. They also cut into inflation-adjusted income, right? Because those prices are higher. So in some ways, that does some of the Fed's work, which you'd normally do with raising interest rates, right? Because you've got less growth, and that can hold back the inflation. It's a setup where the Fed's tools aren't. I mean, they can respond to this, but they're not really well set up for a stagflationary environment. So, but that absolutely is the question about, but they could do harm, right? If they cut rates deeply and that inflation takes off and gets stuck, obviously that is not the outcome that the Fed or anyone else wants either.
It's ugly, man. It's ugly. This is an ugly, ugly market. Again, I don't think we are in a recession or headed towards a recession, but obviously if growth slows down because of tariffs, which we'll see how Lutnick, Besant, and Trump navigate this, then yeah, you're going to have more unemployment. You're going to have higher costs of goods, and you're going to get into what seems like a recessionary environment. I think we can still avoid that pretty easily just by finding a different way to navigate the tariff situation. And maybe April 2nd really isn't doomsday and it just becomes a nothing burger. And there's a part of me, I would say it's a coin flip right now, and I'm 50-50 on it, but I'm definitely not like 70%. April 2nd is the worst thing in the world, 30% it'll be okay. I'm 50-50. I don't think April 2nd has to be the worst thing in the world. I think Trump's talking up a big game right now because he wants to hype it up. But until we get the logistics of these details, we can't just assume it's going to be as bad as it is. Again, my big thing, and I keep repeating this, but and maybe we're just going to have to wait until Q1 earnings come out, which would be probably by end of April. We'll have a better understanding of what's going on. How bad are earnings affected? Like, how bad are Google free cash flows going to be affected? How bad is Meta average ad impression growth rates year over year being affected? Right? Like what are the sort of the core? Are Nvidia's gross margins going down? Is Nvidia going to miss on expectations for the first time in 8 quarters? Like, what exactly are we going to see? Not only out of the Max 7, but then obviously out of the consumer companies in terms of how they navigate consumer confidence here. And how do we deal with it? Right? I think once we get those numbers, maybe it's too late once we get those numbers, but that will give us a much more better understanding of how bad things are, or how bad things might be perceived to be, but how much they might not actually be as bad, given the actual quality of the numbers. Because I don't think Google's going to have a crappy earnings. I don't think Nvidia's going to have a crappy earnings. I don't think Meta's going to have a crappy. I think a lot of these earnings are going to be good. I think Robinhood's going to have a decent earnings. I think Palantir's going to have a great earnings. So, by the way, I did a podcast today with Palantir Executive VP of the UK and Europe, Louis Mosley. So that podcast probably will be out next week. Some of you guys might not know him, but he is running. You guys can't see it too well there, but he is running the entire business in the UK and Europe. So I got a chance to meet him at a couple AIP cons, and this is an awesome guy. And let me tell you, he was freaking excited in this podcast. This guy was like, bro, we are just getting started. He was like, we are fucking crushing it. So, I mean, now, granted, can Palantir hold their multiple even if they deliver an amazing quarter? It's up to the macro, which again, Palantir at 85, trading at 70 times price to sales, has been able to hold on to the multiple in the midst of all the crappiness we've been dealing with in the macro. So I'm very, very impressed with how Palantir is trading, and it's either speaking to the strength of the diamond hands, or it's speaking to the strength of institutional investors that are quite literally buying the dip when they see these opportunities, which is keeping the stock afloat. But I think the fundamentals of the company should be intact when they when they report earnings as well. Yeah, Mosley's a very smart guy. It should be out by next week, hopefully, probably by like mid next week. But this dude's been in Palantir since 2017. He was the guy who got them through the finish line when it came to getting the NHS deal. And if you were in Palantir in 2022, you remember how much pushback they were getting in the United Kingdom to officially get that deal. They ended up winning the deal in September 2023. But yeah, he took a lot of shit to try to get that deal done. And now they're expanding in all these different parts of the United Kingdom. So I think we're gonna get a good Q1 from Palantir, but really just depends on how the macro is gonna treat them. Okay, cool. Let's see what other headlines do we have. So the main headline for today was Trump with presidential pardons and I guess you could say promises of more tariffs. There was an auto group today that warned new U.S. tariffs will increase the cost on American consumers, lower the total number of vehicles sold inside the U.S., and reduce U.S. auto exports. That's from a Reuters report. Pretty logical. I mean, those would be the impacts from aggressive tariffs. Again, Trump's core argument on these tariffs is that, hey, companies will build their cars in America. Yeah, some of them will, but how many of them will meaningfully bring their cars into the United States or their factories? I don't know. And because of that, I think the market is still relatively afraid on how we're going to be trying to navigate this. Let's get an update on the Coreweave IPO. So that went public today. The price changed a variety of times. Here's what happened there. And then we'll keep going.
Well, it's pretty impressive. 40 flat. It was just still above the $39 opening price, but below initial expectations. Coreweave, for those that don't know, they rent out AI hardware, mostly GPUs, so customers really don't have to deal with that hardware hassle, especially all the software. And the CEO telling CNBC earlier today that they had to right-size the transaction based on buyer interest. What is that telling us? It's a tough market out there, and they needed to adapt. This
AKA, we thought we had the demand. We did not have the demand.
was, like you pointed out, Morgan, the first big tech IPO in 4 years and really seen as a litmus test for appetite in the market, not only for IPOs as a whole, but also a pure AI infrastructure play. The company, Coreweave, went from making $16 million in 2022 to almost $2 billion in revenues just last year, which is impressive growth, although not profitable, with looming concerns we talked about, debt. But keep in mind, this is a growth startup formed back in 2017 as a crypto miner, not too long ago. Earlier, maybe just a few hours ago, I caught up with Coreweave's CEO, and he reiterated that Coreweave's debt appears more manageable because it's systematically paid down through reliable revenue streams, like Microsoft contracts, for example, which contributes 2/3 of their revenue. The assets, secondly, such as GPUs, actually retain more value than everybody keeps talking about, this decelerating depreciation or accelerating depreciation schedule. And then lastly, new major partners like OpenAI are really a vote of confidence in the company's long-term viability, aka they wouldn't do business with Coreweave had they not done their due diligence and they're fully aware of all of their debt matters. So like you said, this IPO really does matter beyond just Coreweave as a name, even though I'm sure everyone's really excited here. It's a temperature check, though, for pure AI infrastructure companies, and more broadly shows us whether there's still appetite for tech IPOs while markets remain.
I don't think there's that much appetite, dude. And for those asking, do I have my Google calls? Yes, I have 2 of those 150 calls. I'm in with those with Nancy for January 2026. I've just been selling calls against them every week. So me and Tanner were actually talking about the Discord IPO yesterday, and we were trying to do some like qualitative due diligence on if we would buy the Discord IPO. And we were trying to think like, what's our relationship with Discord? Do we see that as a product that can be around a decade from now? And it probably will be, but like, is this the right time to buy it? In 2021, they raised, if I'm not wrong, let me do the quick check right here. I believe at a $15 billion valuation. They raised $500 million at $15 billion in 2021. Microsoft tried to buy Discord earlier in the year of 2021 for $10 billion. So they raised that 15. Microsoft got an offer at 10. Where do they IPO at? Do they IPO at 15? Because then that's really no growth over the past 4 years in terms of valuation. But then you could argue maybe it wasn't worth 15 back in 2021. Do they IPO at 25? Because that feels a little aggressive in this environment. Now, again, I don't know the numbers, but still, from 15 to 25 means there had to be some significant growth for that to happen. And then B, if they do go public, I mean, is this market going to be friendly to what essentially is a messaging platform that has a really crappy way of monetizing. It's either ads or this Nitro Boost upgrade thing you have to buy. Like, I've never really understood the monetization story of Discord. I mean, billions and billions of messages are sent every single day on Discord, especially in the gaming community. So it's become a real platform that you need to have if you're like into certain niches. Discord is number 7 in social networking on the iOS United States App Store. As you can see right there. What battery percentage do I have? 12%. I got 12%. I got 12%. That's better. Oh, you guys want to see something cool? So not only do I have 12% on my phone, take a look at this. Ready? 3, 2, 1. Boom, baby. Finally cracked the phone. It's been a long, I was waiting for this to happen. I hold my phone so, I guess nonchalantly without the case. I was expecting this to happen much sooner. It happened at the Uber headquarters. I took a seat down on the chair. My phone fell out of my hand and it fell out of my pocket onto the concrete. And we got a nice little crack right there. So Alex says I broke mine last night as well. All right, so there we go. Dude, I'm actually surprised. I got this in October 2023. I am surprised it was this good for this long. So there we go. Your boy finally cracked the phone. At this point, I don't even care, bro. Market's cracked. Stocks are cracked. Portfolio's cracked. Might as well crack the phone. It doesn't even matter. But anyway, in the context of Discord, yeah, like what is the valuation you pay on that? And is 25 billion reasonable at all in this environment for a stock that represents a company that's a messaging platform, which is widely used, but isn't monetized well enough to survive some macro uncertainties that we're seeing currently right now. And that's what we got. You know what's funny about the cracking the phone situation? My first iPhone 5 I got in 2012. This is when I was a freshman in high school. And in gym, you have to change your clothes to like get into your gym clothes in my school, we had uniforms. It wasn't a private school, but we had some weird law in New Jersey requiring schools to have uniforms. It was like so stupid. So we had to wear a uniform every day. So we had to change for gym. And my phone was in the pocket of my shirt. And I took off my shirt to change. And then the phone just fell, it completely cracked. This was an iPhone 5 back in 2012. And then after gym, I had a math test. And so, you know, when you're like, how old? I was like 14 years, like, you know, you feel like shit. Like you just cracked your phone. You feel horrible. Like now I crack my phone. I'm like, okay, I don't give a fuck about my phone. Like, it's not that serious. But when you're that young, you like feel the world's ending. And so I went into that math test. I feel like I was crying answer. I definitely failed that test, dude. I couldn't focus on the test. I was just like, dude, how am I supposed to focus? My phone just like, bro, like everything's gone. So that was my first time I ever cracked my phone. And then I cracked that same phone 3 times after. It got ridiculous, bro. I was like, I don't know why it kept falling. But now I think I've become less materialistic and I'm just like, okay, cool. So what? Who cares? I'm definitely not buying a new one because with this market, we can't afford a new phone. But number 2, it's a phone. Like it is what it is. Who cares? I'm not getting a case. You guys are saying get a case. I'm raw dogging this forever at this point. So I also just like holding the phone without the case, dude. It feels better. So, and what if I upgrade to the 16? It's basically going to be the 15 with a little bit of better camera. Like, so it's not going to be anything better. Yeah, ramen and a cracked phone. Exactly. Ramen and a cracked phone. Naked iPhone is psycho, dude. I've been doing it for like 5 years at this point. I just don't care anymore. Fox says Trump is willing to make a deal on tariff. Yeah, I just saw this headline as well, that Trump is willing to make a deal on tariffs. I don't even know what's happening right now. Yeah, look at this. Look at this. These are the 3 headlines that we got. So we looked at the pharma tariffs. These are 2 more. So Trump says he is willing to make deals on tariffs. Trump says deals on averting auto tariffs would come later, which is actually bullish because it means that he's not actually going to impose these aggressive tariffs if he's getting ready to create some ways to avert those tariffs. But like what do you like what do we believe at this point? Right? Like, like is that actually going to happen? Is that not going to happen? I just think no one has an understanding of how this is going to end up playing out. It also feels like the United States is really trying to get Greenland. Here's what JD Vance said today on his trip to Greenland.
Our message is very simple. Yes, the people of Greenland are going to have self-determination. We hope that they choose to partner with the United States because we're the only nation on earth that will respect their sovereignty and respect their security, because their security is very much our security, as these brave Americans show. Our message.
Is this a joke, bro? Are we actually trying to annex Greenland? Like, are we trying to what is happening, bro? Because I thought it was a joke a couple months ago where Trump said we're gonna get Greenland, we're gonna buy Greenland or whatever. And what now? It's like the administration spending time on Greenland. That like they're actually serious about this. This is what they're focused on, getting Greenland. I mean, I get it. They're the international trade routes. I understand there's some strategy behind why they want it, but to actually do it, yeah, you know, they want a lot of things, but for this to be one of the core parts of their agenda, I don't know, dude. I mean, ideologically, I'm not opposed to it or against it. I didn't think they were actually taking it that seriously. But JD Vance is in Greenland right now, and he's given the speech. So this is quite interesting, to say the least. This is quite interesting. Let's hear from Bernstein analyst Stacy Raskin on NVIDIA. Maybe he can give us some hopium on why the semiconductor trade is not dead.
Nations of your sector, but I take it there's been a lot of discussion.
Neither can I.
There's been a lot of discussion lately, and you can, because I watch you on social media and I read all your notes. What is going on with kind of the bear case around AI compute lately?
Yeah. So it's clearly had a tough start to the year, and most of the AI names are down pretty materially after a couple of stellar years in 23 and 24. I think there's a few things that are going on. There is the broader macro and tariffs and everything. And so there's been a broader de-risking or degrossing, which has hit them because some of them had higher multiples. And so those have come in. I think beyond that, though, there are concerns about, peak AI CapEx, like can 2026 still be a growth year? And part of that is just the numbers have gotten so big so quickly. You wonder. In fact, these worries have been around since the day this started. But they're starting to get a little more steam. You hear, rumors about lease cancellations and other things. And I would say, as of right now, the only ones that seem to be really worried about it are the investors. The companies that are out there actually doing the spending, it still seems like it's full steam ahead, right?
Yeah, I'm glad you said that, because
any signs of actual like CapEx numbers coming down. NVIDIA had their GTC event last week. I thought it was pretty positive.
And even
but the investors are clearly worried.
From a user point of view, and again, I'm just one tiny little data point, but I use this stuff more than ever. And the companies, they're locked in these races where every single day they're leapfrogging one another. So that's what I'm trying to understand as well.
Yeah, like the whole DeepSeek thing, like caused a lot of angst, and it was sort of related to that. It was this idea that, we can get really effective models that don't require as much compute, so that must be bad. And again, I'm everybody's throwing around Jevons paradox and like whatever. But I'm biased. I'm a semi guy. I am of the belief that cost reduction in general is good, that it does drive demand. That's been true in semiconductors for, of course, 5 or 6 decades. And frankly, ever since DeepSeek launched, all we've seen is compute demand go up, right? We've seen CapEx numbers go up. We've heard, stories of GPU shortages in China and everywhere else as they're starting to deploy this stuff. It does actually look like it's driving demand. It's not curtailing.
And you still have an outperform 185 price target on NVIDIA, at least as of a few weeks ago. Could it be the macro, Stacy? I mean, obviously semis are one of the leading indicators for the, so, if we're talking about a spending slump and, the last guest talking about recession, I mean, could it be as simple as that?
Well, I think that's part of it. Again, that degrossing I kind of talked about, so far this year, it's very much related to macro. And semis in general, I mean, the very first chart I drew as an analyst almost 20 years ago was, year-over-year growth of semiconductors versus worldwide GDP growth. And it's a pretty straight line, right? So that correlation is pretty high. And in a recession, semiconductors in general tend not to do all that well. I might suggest that some of the spending on AI, particularly where it relates to productivity savings, and cost reductions and things like that actually may prove to be a little more resilient in a recessionary environment than some of the other like more discretionary spending.
Right, I've heard.
I don't know if that would be the case. I mean, if we get into a recessionary environment, I think there's probably going to be some more pain when it comes to AI and the broader semiconductor trade. But I guess we're gonna have to see if it actually gets that bad. And again, the other big thing that we need to look forward to into Q1 is how aggressive will be the declining CapEx spend by the hyperscalers. Now they all guided for pretty upbeat levels. I think the number is 350 billion for 2025 in total capex spend. Not all of that goes to Nvidia, but a good chunk of it will. If they don't meaningfully decrease their estimates, then I think we survive Q1, or at least Nvidia survives Q1 from a perception perspective. Now, Nvidia's guidance was for $42 billion in revenue. They're probably going to do $43.5 billion in revenue in Q1. So I would imagine that none of the hyperscalers take down their capex spend yet. But if Zucks comes out in Q1 and he's like, yeah, so, the macros changed, the economy's changed, we're kind of going to put less precedence on these GPUs, then I think all hell breaks loose. I don't think he's going to say that because he already committed $65 billion to capex. And then second of all, what's also really important about this is that Zucks is pushing the edge when it comes to AI in terms of training Llama, their latest generation model. I think they're on Llama 5 at this point. And he recently did a couple interviews talking about how vital the GPUs have been to their advertising algorithms to deliver better ROIs for their advertisers. So for them to slow down on that spend would be taking a seat backwards. And if they slow down, Google has to slow down. There's no way Google's spending and Microsoft and Meta are not going to at least increase the spend to an extent. So I don't think that should be the concern. But if it feels like a recession is coming, I mean, all bets are off the table, right? At that point, GPU spend probably, to some extent, would take a little bit of a dip, if not a meaningful dip. Andy says, I miss growth. I miss growth as well. But this is the environment we are living in. NVIDIA down another 0.4% after hours. Wow. The S&P, holy crap, down 1/3% after hours. Tesla down 0.5%. NVIDIA down 0.5%. GameStop down 0.5%. The Q's down 0.5%. Hood down 0.5%. I think the pharma tariff stuff that Trump said after hours, is that causing this? SoFi's down 0.5%. Netflix is down 1/3%. Palantir is down almost 1%. After hours. It's like they didn't even go to happy hour today. Isn't it Friday? Shouldn't everyone just go to the bar or something? Why are they still trading? Why are they still selling shit off? Oh my goodness, dude. Eli Lilly now down about 0.23% after hours as well. Fear and greed is at, I think, 22. Where are we at? We're at 22. Yeah. We were at, I think, 26 this morning. So 2% down on the S&P. There you go. That'll get you a little bit lower here right now. Yeah, no mocktails today. No mocktails today. All right, guys. I think that's pretty much it for today. Let me know what you guys are doing over the weekend. There will not be a Palantir Weekly today. Not everyone can make it, so this is the last live stream for the day. Likely no streams tomorrow, but on Sunday we'll be back for futures. So we'll get ready to lose more money next week, or maybe have a face ripping rally, as Tom Lee says. But yeah, I'm about to go pick up my dad's Tesla, so gonna go get that. Not really doing anything over the weekend. Sunday we'll be back for futures, and then Monday next week's gonna be important. We got Tesla deliveries. We have April 2nd for tariffs. We got a bunch of macro data next week as well. And then we see what the start of Q2 looks like as we get into the second quarter of 2025. I need a cocktail to survive that beating. I wouldn't blame anyone who takes a little bit of a sip tonight on some drinks. It was an aggressive week, dude. Absolutely aggressive week. Kyra, thank you for the $5 super chat. Greenland is as easy to understand as the Panama Canal. No, I agree. I understand why the U.S. strategically wants the Panama Canal or Greenland. I just personally didn't think they were going to really go after it and make it an initiative, but it seems like that's what they're trying to do right now. Again, SoFi, or not SoFi, Steve could not make it today to talk about SoFi. I'll try to get him on Monday. Maybe he'll make an appearance on the Sunday's Futures show. We'll try to get him on there. But yeah, he just wasn't able to make it today. So we'll hopefully have him on later this week. Yeah, I'll definitely post a pic of my dad's car. I'll post it on Twitter. Twitter's in the description. It's a Quicksilver Tesla Model Y, not the brand new one, but the old one. So yeah, I'll post it, and he'll officially be driving a Tesla. It'll be fun. He's been driving gas vehicles his whole life, so this will be the first time he gets into the Tesla. He's driven my Tesla a little bit, which is why he started liking the car. So it'll be a brand new era for him in terms of driving. Mine's is white on white. His is Quicksilver on black. So a little bit different, but he will have a brand new Tesla. Seems like you guys aren't doing anything over the weekend. Everyone's just like getting a drink over the weekend. Dude, everyone should go out over the weekend, dude. Go do something. Go with your friends. Go get some nice food. Go walk in the park or something. I think everyone needs to take their mind off this market. And you know, quite frankly, it's just been such a ping pong kangaroo type of market. You think you get momentum, it gets slapped away. Get some momentum again, gets slapped away. You think things are ready to move in the right direction, or worse, you think the market is done caring about tariffs, which is what we saw on Monday when Trump did that whole Venezuela thing. We're like, oh, the markets, they said they don't care anymore. No, they do. It's just they pick and choose when to care. And that's what's making this market a little tough right now. We didn't install the home charger yet. We're going to be installing it pretty soon because now we have 2 Teslas at home. But I have the Tesla charger, the home charger product. We just haven't installed it yet. There's a supercharger so close to me. That's why I just never felt motivated to install it. But yeah, we'll probably be doing that really quick and keep going from there. RNT1 says, I walk every day. I'm having ice cream this weekend. Yes, everyone deserves a little bit of ice cream this weekend. Ray says, I've been a member for 12 months. All I got was $400,000, new car and nothing. Y'all better not join. You're likely to not get the same results. I appreciate you, Ray. Thank you for being here. Hopefully you enjoy your weekend as well. Make sure you take Michelle out. You got to take her out on a date. Did you guys know Ray and Michelle in the chat, they met through my chat? They literally met through my chat. He slid in her DMs. I don't know how he found her. He did some stalker shit to find her from the YouTube chat. And he was just so irresistible in the DMs that she ended up marrying the guy. So you never know, man. Sometimes you could find your loved one in amidst chat. And so everyone should make sure they're always attentive to the chat because you might just fall in love. So there you go. All right. That's it for me. Thank you, everybody. Appreciate it. Appreciate all the love and the support on the Robinhood event this week. It was really fun, really awesome. You know, just got to be in a situation where you get to be a part of a innovative company that wants you to help tell their story, and just like seeing everything was super awesome. It was great to be with Tanner and Roy and be with friends. I think I got a lot closer to Tanner and Roy as well, which was cool, right? Because, you know, you make friends through the internet, and, you know, when you're sitting with them at 12 a.m. at night and actually talking about things that matter in life outside of the stock market. Like, even though we talked a lot about the stock market, like at breakfast, we were like, so what do you think about a firm's gross margins? The waiter was probably like, what are these fucking nerds talking about right now? But we got to talk about like actual life. And so it was so much more fun with friends being there. And now we're back. I don't think we're doing any traveling until the next meetup, which probably is going to be Toronto. I don't know when. I'm hoping for April. I will give everyone details when it's live. But yeah, we should have some stability with the bricks for the next couple weeks, and then we'll keep going from there. All right, cool. Thank you, everybody. I'll post some pictures of the Tesla later tonight on Twitter. No Pouncer Weekly tonight. We'll be back for the Sunday Future Show. Thank you, everybody. Love you all. Enjoy the weekend. We'll see you guys on Sunday. Bye, everybody. Have a good one.